Gautam Shah joining us now. He's founder of Goldilocks Premium Research. Gautam, great to have you on the show as always. Let's start with where you see the indices going, and are you seeing any strength really coming in? Especially, I mean, what do you think we're ending 2024 calendar year on the Nifty?
Good morning. I think we've rallied 1,200 points from the recent low, and we are still debating whether we've made a low or not for the right reason. But I do believe that the screen has looked really vibrant in the last 1 week. Participation is excellent. Momentum is back. Sentiment is much better. When we spoke to people on the street last week, when we were close to 23,300, clearly, talks about slowdown and all those geopolitical factors were at play, and nobody gave importance to domestic money. But I think this rally of 1,200 points, again, you want to put domestic money responsible to it. I think the charts are very well placed. I do believe that we made a bottom at the recent low, and more sectors are starting to do well. As I said, mid caps, small caps, the way they've come back in the last 1 week, it's pretty good. We knew that there would be a hurdle around 24,500, and you would see in the last couple of days, including today, you are seeing the market find some resistance at this final hurdle of 24,500. And once this is taken out, I think you are ready for a 500 to 700 point move towards 25,200. But if you talk medium term, is it a case where the markets will start doing well once again and start making new highs in a hurry? The answer is no, because I think the battle is still between domestic money and the economic issues that we are facing right now in terms of slowdown and earnings. So that will probably keep the market contained in a sort of a cage or a range for many months to come. But the bias and the trajectory is clearly up. And with what banks have done in the last 1 week, I'm very encouraged to believe that they will be the leader for the next 3 to 6 months.
So you're buying Bank Nifty, Gautam, at these levels. It's Amina joining in. And also the couple of banks that we've talked about for the last couple of months has been your HDFCs and ICICI banks of the world, including SBI, which may not have moved as much. But your trade on Bank Nifty and your trade on your top banking picks for the December series.
See, I do believe how sectors handle difficult times is an indication of what they will do in the good times. And I think for about 6 weeks, you had the Bank Nifty stay in a range while the Nifty corrected about 10%. So on the ratio charts, which we track as technical analysts, I think it was upward sloping. And I think this underperformance of many years could now be coming to an end. Maybe it could do with what the RBI might do over the next couple of months. I think that could be something that could be getting priced in at this point of time. So I do believe that the Bank Nifty is moving towards 55,000, and it is likely to make new highs well before the Nifty, something that we are not used to. So that's one big takeaway. And if you're talking 12 months, I think the bigger target for the Bank Nifty from here could be about 60,000. So looking at a decent 7,000-8,000 point move on the Bank Nifty if somebody takes a 12-month view. If this has to happen, the top boys will have to do well. HDFC Bank has been a favorite. Every time we've interacted, we've spoken about it. The stock is trading at lifetime highs, which I'm sure makes a lot of people happy. But I think this is just the beginning of a much bigger trend. And I do see HDFC Bank moving towards 2,000, 2,200, maybe plus over a period of 3 to 6 months. And the dark horse or our favorite is clearly SBI. I think valuations, technicals, charts, you look at anything, SBI I think is setting up for 1,000 plus again. So I'm really looking at only these two names. I'm not going lower down because I think this is not a market where you can be into grade B and grade C.
Gautam, good morning. Neeraj here. Is that true for just banks or some of the other favorite themes as well, that you would stick to grade A and not go to grade B and grade C?
Yeah, I think that's a very good point, Neeraj. And I think our stance has been that anything that you do in the markets now, let it be grade A. In the last 3 years, you bought anything and everything and it did well. It got justified on Excel sheets and on paper. But I think now we've come to a point where valuations have reached a point that you can't just buy anything and everything. I mean, a great example is where IndusInd Bank is today and where HDFC Bank is today. I think, and you are seeing many such divergent cases in each of the sectors. So stick to the book, boys. I think you still have earnings to deal with in January, which I think is going to be a big challenge. So I think the concept of winner takes it all, I think is going to be at play over the next 3 to 6 months. So please stay with the industry leader and challenger, and I think you will grossly outperform the market.
Would the same, Gautam, apply for IT as well? The Nifty IT has been a positive surprise for the last week or so, continues to be today as well. Would it be the same outlook, stick to grade A?
I think so, but even mid-cap IT has done quite well in the recent past. And I think two of our favorites have been Mastic and eClerx, and even a Persistent Systems. And I think they've done really well. And I think there is a lot of earnings visibility over the next 3 to 6 months. But, post the US presidential elections, it just seems as if, IT has got to spring up. And I think since then, it's just been one way up for this entire pack. And even from here, I see a 10 to 12% move on the IT index, led by possibly TCS, which can gradually move to a level of 5,000. Now, that will be an event in itself if it were to play out. So if banks are in a good place, if IT is in a good place, and Reliance is non-existent in some sense, then I think the market is safe. You don't need to make new highs. If you are ranged and if you trade with a positive bias, I think smart guys will make enough money out of that.
Good point, Gautam. And I know you said let's stick with grade A, and that's the same argument where investors have been advised for over a year now to find value in the large cap place because the risk reward there was far more favorable. But at any sort of uptick, it's the broader market that starts outperforming, and that is something that's worth taking note of in some ways. You talked about IT, you've talked about banks. Let's talk metals now. Historically, December usually has been a good month for metals. And I know it may not be fair to look at a sector from a 1 month time horizon, but let's extend that to maybe 1 quarter or 2 quarters. Would you consider a long trade on metals? And if yes, which is your top pick?
Metals, I think, is the dark horse sector of the next 1 year. And I do see many of these stocks delivering anywhere between 20 to 40% over the next 12 to 18 months. Now, you might not have a fundamental thesis. And, to whatever I speak to people on the ground and the way we look at the charts, we do believe that it's at a cusp of something really big. If you look at the 2-year chart, you'll notice that metals did exceedingly well for a period of 1.5 years. And in the last 6 months, it got into a range, 8,600 on the downside, 10,400 on the upside. Now it seems that consolidation is coming to an end. The news flow that's come out of China in the last 3 weeks have been a lot more supportive. And, the management talk has also been quite positive. And since we track a lot of commodity charts, we feel that that interrelationship will also work well. So I do believe that the metals index itself can appreciate about 20% from here. So it could be one of the top performers if you take December to probably next December. And all the top stocks, led by a JSW Steel, a Vedanta, a Hindalco, Nalco, which has been a favorite, and even a Tata Steel, which seems to be languishing at 140. I think the risk reward is very lucrative to be making investment positions here.
Gautam, I want to ask you about chemicals and CDMO, but just very quickly, I mean, precious metals out there too. I mean, you've been a big believer in gold. Gold continues?
Yeah, gold and silver is a structural story. I think no matter what, I think silver is tested a level of 35, seen a bit of a cool off. I do believe that silver will gradually move to a level of 41. So anywhere around 29, 30, I think it can be invested into even now. Gold, I think, remains a great story. It's taken a bit of a pause. Maybe after US elections, people feel that the world is going to be a slightly more comfortable and relaxed. It could be, and we all want that. But any which way, I think gold is going to be a trade that is likely to move towards 3,200 if the view is 12 to 18 months.
Gautam, now, like I said, what I want to really know, last 2-3 years, chemicals have been on the sidelines. We hear stories of destocking, etc., starting to come about, and therefore, maybe, possibly, that 2025 could be a good year for chemicals. I would love to know if charts indicate anything like that.
Okay, Neeraj, first things first, in bull markets, you don't work hard. I think chemicals has been a very complex basket. It's had a lot of stop starts multiple times. It tries to do well, it tries to get into a trend, and then just falters and comes off. In fact, as we speak today, there are many chemical stocks which are near 52-week lows and very few names which are near 52-week highs. So I think it's a very complex trend. There is no real clarity that they will come back. There are few standalone names that we like. For example, a PI Industries or a Tirumolai Chemicals, which we have backed in the last 3 to 6 months. But if I look at it as a sector as a whole, I don't think there is any great opportunity based on today's data. If things improve over the next 3 to 6 months, I will look at it, but I don't want to go that route. But the other sector which I like, and we've been pushing it for the last few months, is real estate. I think some of the top stocks there, whether it's a DLF or a Macrotech or a Oberoi Reality, wonderful chart, great story, and I think smart money is chasing it. Fundamentals are right up there. I think it could be one of the bigger winners along with metals over the next 6 to 12 months.
Gautam, just wondering if you're buying into this excitement on platform companies, all the new rage, or are you sticking to the banks, IT, metal, the safe and sound?
Yeah, I mean, if I have to just broaden it a little more, new age is here to stay. I think it's changing our lives. AI is changing our lives, no doubt about that. And therefore, some of these new age companies, whether it's a Zomato, which we've liked for a couple of years now, whether it's a Nazara, a card trade, which I think is a great model. Affle India, a stock that we covered recently, and we believe it can do big things, and it's a great proxy to play AI in India. So some of these stocks we like, but then you need to be careful. You can't think 3 years, 5 years, because the world is getting disrupted every 3 months. So keep a watch. Like Zomato has been a 50 to a 300, but then the story has played out beautifully. So keep a watch on earnings, and new age is something that you cannot ignore for sure.
But Gautam, your top pick here.
You mean in the new age space?
Yes.
I would still go with car trade. I think this is a company that's really disrupting the industry. We've been backing it from levels of 700. It's already at 12, 1300 today. And I think it can go on to do much, much bigger things over the next 2 to 3 years.
Thank you very much, Gautam. Always good talking to you. I'd love to slip in a question on Bitcoin, but we'll save that for our next conversation. And now that you're in Dubai, that clearly seems to be one space where a lot of people would be seeking your advice on. But thank you. You have a good day, and we'll see you soon. Or rather, have a good weekend, and we'll see you soon.